Hello, in this class we'll be looking at the final account of a sole trader. The final account of a sole trader is divided into three parts, which are A. Trading account, B. Profit and loss account, C. Balance sheet. What is trading account? Trading account is prepared to show the gross profit or gross loss for the period of a time. It must conform to the rules and principles of double entry. The heading should be trading profit and loss account for the year ended. For example, if you are preparing your account at the end of June, you're going to say trading profit and loss account for the year ended 30th June 2016. This account looks at the difference between sales and the cost of goods sold. The method of presenting the trading account used above is called T method. However, another method that can be used is vertical method. Now, what are the terminologies to consider in preparing trading profit and loss account? Number one, purchases, sales, opening stock, closing stock, carriage inward, return outward, carriage outward, cost of goods available for sale, cost of goods sold, gross profit, net profit, goods withdrawn for own use, goods stolen or damaged. All these are the terminologies that we consider in preparing trading profit and loss account. The treatment of trading profit and loss account is debits and credit. The debit is going to show the profit and loss account, while the credit is going to show the purchases accounts. Next, let's talk about balance sheet. What's balance sheet? Balance sheet is a statement that shows the presentation of the summary of assets and liabilities in a well-arranged form so that the financial position may be well ascertained. The balance sheet is always prepared as at the end date of the trading profit and loss account. That means if our trading profit and loss account is ending by December 31st, 2016, then our balance sheet will be as at December 31st, 2016. The balance sheet are set out in order of permanence of liquidity. Now, the following are the terms used for balance sheet, which are very, very important for you to know them. One, we have the fixed assets. Two, we have the current assets. Three, we have the fictitious assets. Four, we have the intangible assets. Five, we have the liquid assets. Six, we have the wasting assets. Seven, we have the liabilities. Eight, long-term liabilities. 9, current liabilities. 10, capital. 11, working capital. 12, capital employed. And 13, over trading. These are the terminologies that are used to prepare balance sheets. In our next video, we will be taking some past questions in SSCE and UTME to further prepare you for your exams.